Good morning, Namaskar, Suprabhat, Vanakkam, Sat Sri Akal, Game Show. I welcome you all in our today's session of salary topics. In the last session, we have covered certain perquisites like medical facility, like the rent-free house, and other provision of salary head of income. And I believe you have revised all those provisions. And of course, also try illustration, which I have given you for practice. So students, I believe you all are studying very hard to achieve the goal of your life to become a chartered accountant as soon as possible. I am CA Ankit Sharma, your income tax faculty for today's session. So today we will be discussing some remaining perquisite. And in those perquisite, one of the most important perquisite, car facility we are going to discuss. Of course, some test your knowledge question. The remaining perquisite standard deductions, etc. So today's session is going to be very, very important because now we are going to complete the salary topic, the today's session and the session day after tomorrow, in which we will complete our salary topic. So before starting the class, I would like to discuss some topic from last session. So I would like to hear from any one of you regarding these topic in very short. The first would be rent-free house provided if house owned by the employer. So how we tax the perquisite of rent-free house if the house is owned by the employer? The second question I would like to discuss is a specified employee. Because in the last session we have discussed there would be two kind of obligation. One in which bill in the name of employee or the person appointed by employee but paid by employer. So that is going to be taxed in a specified employee as well as non-specified employee. But if there are perquisite or obligation in which bill directly is in the name of employer, and of course the facility is used by employee and payment made by employer, or the person directly appointed by the employer in the service of employee. So those kind of obligation or perquisite is going to be taxed only in the hands of a specified employee. And what is the meaning of a specified employee? That I would like to listen from anyone of. The third one is medical facility abroad. That means outside India. So if any employee is receiving medical facility outside India, then how we are going to tax it under salary head of income, in which circumstances? And the last one would be education facility. So if employee's children is availing education facility from employer owned educational institution or other case, so what would be the taxable value? This is something I would like to listen from all of you. One by one you can answer. Vishakha raised her hand. So first of all, Vishakha, you please explain the meaning of rent-free house or taxability of rent-free house when the house is owned by the employer.
Good morning, sir. Am I audible?
Yes, you're audible.
Yeah. So, rent-free house, if it is unfurnished, we will see the population. If house is owned by employer, if the population is up to 15 lakh, taxable value will be 5% of salary. Population is 15 to 40 lakh, taxable value will be 7.5% of salary. If the population is more than 40 lakh, taxable value will be 10% of the salary. If the house is furnished, then we will take taxable value of unfurnished as we calculated above, and the 10% per annum of all cost. We will add, then we will calculate the taxable value of furnished plus unfurnished.
Correct. Well done. 10% of original cost if the furniture is owned by employer,
Owned by
and if it is
employer,
on rent, then we will add the rent charge. Well
rent
done.
free.
Very nice. So the next is the meaning of a specified employee. Santosh would like to tell. Yes, Mr. Santosh, please go ahead. Santosh.
Yes, sir. Sir, actually, no, I don't know the second question answer. I had to answer question number first, sir.
Nee, would you like to answer medical facility or education facility?
Yes, sir. Education facility, sir.
So look, fine. You tell me the education facility.
Education facility, sir, per child 1,000 per month. No, they are being studied. We have to. I mean,
It's okay. In that case, the actual amount paid by employer is going to be taxable value. You tried, that's good. Well done. Very good. Okay, next.
sir, actually, I'm a new student. Hello.
Hello. बोलिए.
Sir, actually, I'm a new student. I joined from this session only for tax, and I would appear next year examination, sir, not September
Not
2020.
a problem. Not a problem. If you are a new student, I welcome you. But I would like to tell you one thing. Please do one thing. Start watching the lecture from day one. So you would be able to understand this whole scenario because salary is a topic now which is interconnected. So you're welcome. You can see the lecture.
Sir, I, I watched on YouTube, sir, basic concept about it.
Okay.
Basic concept.
Okay, no problem. So now, Isha, would you like to tell
Sir,
the
when you see, sir?
specified employee?
Sir, specified employee means employee and the director of the company, an employee who have more than 20% of the voting power, more than equal to 20% of the voting power, which is substantial right, and employee with salary is more than 4 lakh in any preceding year from one or more employer.
Monetary salary.
Yes, all monetary items are included.
Correct. Well done. Very well done. So now we have left with medical facility outside India provision. So who would like to tell about the medical facility outside India provision? Vishakha raised her hand. Okay.
Yes, sir. Under medical facility outside, sorry, under medical facility outside India, the treatment of patient, travel of patient and attendant, and stay of patient and attendant is exempt up to the limit of RBI. Exempt up to the limit of RBI. If the gross total income exceeds specified limit, that is 8 lakh, then the exempt value will be taxable. If
Travel
the
exempt value is going to be taxable. Only travel perquisite value is going to be
yeah,
taxable.
tax.
Correct. So in case of medical facility outside India, there will be three facilities. One would be travel facilities for patient and one attendant, stay facilities of patient and attendant, and treatment facility for patient. So these amount is going to be exempted as allowed by RBI limit. But if the gross total income is exceeding the specified limit, which is 8 lakh, then whatever we have exempted in respect of traveling expenditure, that is going to be again add into my gross total income, or we can say in my salary as a medical perquisite. Very well done, everyone who have given answer. So now we are moving on to the our as usual thought for the day. Good morning, Sridhar. Good morning, Mohammed. Good morning, Santosh. Vishakha, good morning. Mehak, good morning. Sorry, sir, I am late joining. No problem, it's better late, but you have to come and join. Sure. Thought for the day is very, very deep. If you are able to understand it, you will feel the power of positiveness in this thought for the day. You can see sometime when you are in a dark place, you think you have been buried, but actually you have been planted. So a very deep thought, if you're able to understand the meaning of this thought, that will give you a very positive message. And you can see in the site has been written that the story of Thomas Edison, the power of positive thinking. So when you think there is everything is dark, there is no hope, and you are thinking that you have been in a very difficult position, so maybe that is a time before your success. So a seed when we dig into the for the plantation purpose into the soil, so there would be darkness everywhere, but that is just before the beginning of the beauty of that seed to become a plant and the tree, etc. So whenever you feel there is things not going in your way, just believe in yourself, be positive, and just feel that next day or the future would be yours if you would be positive. So this is just you have to understand the situation would be difficult or could be difficult in your life, but please be positive for all the time. Okay. So that was thought for the day. And now we are moving on to the provisions. And today, the first provision we are going to discuss is motor car facility. So in the last session, I have given you illustration number 11, 12, 13, 14, 15, 16, 17, 18, I guess. So if there is any issue in any of these illustration, you can tell me. And if you have tried and you have solved it, I believe you must be feeling that these provisions were not that difficult as it seems. When we go through with the provision theoretically, it seems difficult, but if you practice, you will feel that these provisions are not that difficult. Vishaka saying done, very good. Sridhar also tried all the illustration, very good. Thank you so much, student, for your efforts. So now motor car facility, and let me tell you, it is again a complex structure perquisite. Like in case of rent-free house, if you think about the rent-free house perquisite, you can see there would be a case of unfurnished accommodation. In that unfurnished accommodation, there was if house provided by government employee, if house is provided to other employee, then furnished case, then unfurnished case, then if you are having a house in two rent-free house simultaneously the provision if you have been provided an accommodation in a hotel for certain number of days, etc. So there are multiple cases. In the same way, in case of motor car facility, there are multiple cases. And if you are trying to understand logically these cases, you will find that this perquisite also not that complicated. But if you're not trying to understand it, you're just trying to read it and learn it, there would be difficulty. So please try to understand this perquisite logically, and you would be able to understand this perquisite very easily. I have uploaded diagrams, chart, etc. So I believe that you must have downloaded it. But now what is the meaning of car perquisite? First of all, understand the meaning of this perquisite. So for the purpose to commute from your house to the office and going back, there is a possibility that your employer can provide you transport allowance. So you can conduct your journey from your office till your house and vice versa. But if employer provides or employer agree to maintain to provide you the maintenance of car facility, or if they are ready to provide you a benefit of car and ready to reimburse the expenditure of repair, fuel, etc. So that case, they are not providing you any cash benefit. They are providing you a facility on the basis of reimbursement, etc. So that is going to be taxed under the head of car facility perquisite. So now you can see as if motor car is provided by employer to the employee, it will be perquisite in the hands of a specified employee only. But there are two situations. In one circumstances, this perquisite is going to be taxed in both employee. In other case, when the car has been provided by employer, then it would be taxed in case of a specified employee. You will able to understand when I will explain this perquisite with the help of a chart and diagram. However, the use of any vehicle provided by company or an employer for journey by the assessee from his residence to his office or other place of work, or from such office or place to his residence shall not be regarded as a benefit given or provided to him free of cost or concessional rate. So what it is saying? It is saying if that facility is going to be utilized only for official purpose, you are just going office and coming back, or maybe you are just going to the client with that facility. So in that case, it is not going to be taxed. As we have discussed in the last session also, any perquisite could be taxable in the hands of employee if that is for personal benefit. So if any facility you are using for official purpose only, that cannot be taxed. Now, how this perquisite is going to be taxed, you can see a format of the provision has been made in the table form. And these are the multiple cases you must be going through in front of your screen. So this is car perquisite, almost covering 2 pages in a single perquisite. Do not worry. Let me tell you this perquisite with the help of a diagram. It's very logical. So if you will stick to the logic, you will be able to understand. And let me tell you, you are able to answer me without even I am going to tell you the provision if logically you are going to understand this perquisite. So let's move on to understand the car perquisite, car facility. So there would be 2 situations. In this case, situation number 1, either the car owned by employee. So when car is owned by employee and the perquisite is the expenditure which is going to be paid by the employer. So if car is owned by employee, in this situation, this perquisite is going to be taxed for both employees. Both employees means students is specified as well as non-specified. Clear? So if car is owned by employee, in this situation, this perquisite is going to be taxed in case of a specified as well as non-specified employee. But suppose the car which is using by an employee is owned by employer. That means employer provide you his car to commute from office and residence, etc. Owned by employer, or either it is on a lease rent. Employer has taken that car on lease, and that car has transferred to you for the purpose of utilization from office to residence and vice versa. So if car has been provided by the employer, the question says car has been provided. That means we are talking about second case. If car has been provided by employer, that means car is either owned by employer or on lease. But you don't own the car in that situation. So if this kind of perquisite is there, this is only going to be taxable in the hands of a specified employee. So if a non-specified employee is received a car from his employer to commute from office to residence and vice versa, that is a non-taxable perquisite. Okay. Chalo. Moving on. First case, we have to understand first. So in first case, you are seeing that car is owned by employer. So what would be the perquisite? What is the benefit? Suppose apply upon yourself. You are an employee. Your company say that you can travel by your car to office and going back. So in that case, car is mine. So nothing is free because I am using my own car, and perquisite would be in that situation only when something is free. So when I am using my car, so there is nothing free in this. So what is going to be free, which can be called as a perquisite? That would be the expenses of car, the fuel, the driver salary, maybe the repair and maintenance charges. So if these expenses has been paid by employer, so those expenses could be treated as perquisite. So the first thing, car is owned by employer. So you should understand the car value cannot be a perquisite in this case because it is owned by employee. But the main thing is expenses met by, so the running expenses, etc., is met by, there could be again two situations. Either the expenses can be met by employee himself, no reimbursement, etc., or expenses is going to be paid by employer or reimbursed by the employer. So can you tell me, if car is owned by employee and all expenses of running and maintenance of car is also paid by employee, can you tell me what is going to be the taxable value of perquisite in this situation? Look, I did not tell you the provision yet. And even without telling you, if you are logically applying this concept, you can give me the correct answer. Suppose you are an employee. Your employer says you can come to the office by car. Please use your car and please use your expenses. We are not going to reimburse any expenditure. So what should be the taxable value in this case, in your opinion? Sridhar is saying fully taxable. Mr. S.K. Inam is saying 0. Tanisha is saying 0. Kambir Ka Jan, sorry, very complicated name, did use the perquisite. Correct. Dhanlakshmi is saying no tax. Isha is saying nothing taxable. Mac also saying non-taxable. Visual is saying nil, no perquisite. Of course, there is no perquisite. The nil, non-taxable also not required. The correct answer would be not applicable because there is no perquisite involved. Perquisite would be only in one situation when your personal expenditure paid by employer. So now there is nothing is paid by employer. Your car, you are going to expense for it. So your employer is not paying anything for this. So there is no perquisite at all. So nil, not applicable, whatever you can understand, but the correct would be not a perquisite. Suppose if this question is in a MCQ, an option is nil, 0, not a perquisite, or none of the above. The correct answer would be not a perquisite. Understood why? Because nothing is received for free from my employer. Okay. Understood? Anything complicated? Of course not. Sure. Now, if car owned by employee, but the expenses is met by employer. So now you understand what is going to be the taxable value. The expenses part could become the taxable value in this case. But now, if expenses paid by employer, there could be again 3 situations. That depends upon the use of that car. The first situation could be the car has been used 100% for official purpose only. That means the employee only use his car to commute between residence to office and vice versa. Car has not been used for personal purpose. So in practical life, that I believe not possible. If expenses has been met by employer and car is owned by employee, then in practical life that won't be possible, that 100% it has been utilized for the purpose of only official work. He did not went anywhere for the personal work with this car when expenses met by employer. But in examination, there could be a question. They can say that suppose 100% for official purpose. Then what should be the taxable value? Again, there is nothing for personal purpose utilization. So if there is no personal utilization, the taxable value will always be nil. As I have told you, if any expenditure has been used only for official purpose and reimbursed by employer, the taxable value would always be nil. Clear? The second situation could be that suppose it has been used. Question will tell you. Car has been used 100% for personal purpose. Only. Now this is just the opposite of first case. First case was saying 100% for official purpose. And now this is saying suppose if 100% of that car utilization is for personal purpose only. Now suppose if I'll say that the expenditure, in this case expenditure, in this case expenditure has been paid by employer, suppose 25,000. And you utilize that car only for personal purpose. So what should be, as per the concept, whatever we have discussed till now under salary head in respect of perquisite, what should be the taxable value in case of if car has been used for personal purpose only? And suppose the expenditure paid by employer is 25,000. So that is going to be 100% taxable. Because whatever the employer has been paying, you are utilizing it for personal purpose. So the amount actually paid by employer should be the taxable value. Is it difficult? It would be difficult if you try to just read and not try to understand it. Expenses paid by employer. And in the question, the situation would be given. The first thing you need to identify in the question is who owns the car. So you will be able to understand, do I need to solve this question as per car owned by employee case or car owned by employer? The second is you need to find out who is paying the expenditure. So if employee is paying the expenditure, you have to focus on that part of solution. If the employer is making the expenditure, then you need to find out one more classification. Used 100% for official, you know the taxable value. Used 100% for personal purpose, then full value paid by employer is going to be taxed. But again, this first and second case is practically not possible. Somebody will use some part, of course, for other purpose. So now third is both. In practical life also, this is the most applicable case. So if the car has been owned by employee and expenses has been paid by employer, And if the car has been utilized for official as well as private purpose, then what is going to be the taxable value? Now, this is little technical. It says you need to take the actual expenses paid by employer. So whatever actual expenses has been paid by employer, you have to take it. That will be given in question. Suppose 40,000 rupees has been paid by employer. But for the purpose of finding out the taxable value, a very logical question I'm going to ask to all of you. Suppose out of this total value of expenditure which has been paid by employer, and the car has been utilized for both purpose, official as well as personal. So what should I reduce? What should I reduce out of this total expenditure? What should I reduce from this total expenditure? So I will get the taxable value. Should I reduce personal expenditure out of this 40,000, or should I reduce official purpose expenditure out of this 40,000? Listen again. The employer paid 40,000 in total, and we have used this car for personal as well as official. Now we need to subtract something from this 40,000. You have two options. So you need to tell me what should I subtract, so I will get the taxable value. The expenses used for official purpose should I subtract, or the expenses used for personal purpose should I reduce from this 40,000 to arrive at the taxable value? Understood the logic? Visual is saying official, Vishaka saying official, Meenu also saying official, Karan official, Sridhar official, Tanisha official, Kambiriya Kanajaram official. SK now is saying expense used for personal. This is wrong, SK. Official expense is the correct answer. Isha also correct, Mehak also, Santosh, Dhanlakshmi, Nishan. So everyone gave the correct answer except Mr. SK now. So out of this 40,000, if I'll reduce the expenses we have utilized for official purpose, then we will get the personal expenditure value. That is going to be my taxable value. So now what do I need to reduce from it? Less actual expenditure on official purpose. That would be given in question. You do not need to bother about it. If that would be given in question, we will utilize it. But actual expense on official purpose, if given in question. But in practical life, to identify out of this 40,000, how much or where he has been utilized this car for official and personal, practically it's not possible or very difficult. But if it has been given in the question, then you take that amount. Suppose in the question it has been given 18,000. But this value we need to compare with a fixed government value, a flat government value. So now this value need to be compared with a fixed value, which has been specified. It says if every car has a cubic capacity. So the fixed expenditure has been notified on the basis of car cubic capacity. So that car cubic capacity will also mention in the question. You just need to know the provision. Every other information would be in the question. So if car cubic capacity, we called it CC, or it could be liter. So if car cubic capacity up to 1600 cc, that would be given in question. Or we can write it down like 1.6 liter. So 1.6 liter or 1600 cc is the same thing. So if car's cubic capacity is up to 1600 cc or 1.6 liter, then the fixed expenditure would be taken 1800 rupees per month. This is fixed limit specified by the department. If the car cubic capacity is more than 1.6 liter or more than 1600 cc, then we need to take 2400 rupees per month. Only one of this is going to be selected, because if the car is up to 1600 cc, we need to take 1800 rupees per month. If the question says it's more than 1600 cc, then we need to consider 2400 rupees per month. It's not yet completed, let me tell you. So this is actual official value, and this has been prescribed by the government. So either we need to take 1800 or 2400 as the case. Higher, lower is not applicable because any one situation would be applicable. In this value, either 1800 or 2400, one extra value also need to be added, which is also fixed. That is, if driver also provided by the employer, if driver also there, then 900 rupees per month for driver salary need to be added. So suppose if this is the car up to 1600 cc, no driver, then we will only take 1800 rupees per month. What do we need to do with this 1800? I will explain. If 1.6 liter capacity car and driver also provided, then we will take 1800 plus 900. That means 2700 for the purpose of calculation. Suppose if the car capacity is more than 1.6 liter and no driver, then we will only consider 2400 rupees per month. If driver also in this case, then 2400 plus 900, 3300 would be the value. What we need to consider per month. Now suppose in our example, just suppose this situation is fulfilled. Suppose in our example, the car is having 1800 cubic capacity and driver also provided. So how much value we need to take? That would be 2700 rupees per month. 1800 plus 900. And for the full year, that would be 32,400. Understood? So what we were actually doing, वापस से समझते हैं एक बारी क्या चल रहा है. So if car owned by employee and expenses paid by employer. Okay. So in this situation, if the car has been used for both purpose, then we have to take the actual expenditure paid by employer, total expenditure, actual expenditure, that is 40,000. That would be given in question. Okay. Then we need to reduce the actual expenditure which has been used for official purpose. If given in question, you have to take that value. Now this value needs to compare with this value, which has been found out on the basis of fixed value which has been provided by the government. In a question, it may be possible that actual value is not given. Maybe. So even actual given or not does not matter. You can always find this fixed value because the car capacity would be in the question. Driver is there, not there, that would be given in the question. On that basis, you would be able to arrive this fixed value. So if the actual official value is given, then you need to compare this with fixed value, and the higher is going to be the final value. Suppose if actual expense is not given, then automatically this fixed value would become the higher value. What do we need to do with this higher value? Let me tell you. Out of this expenditure, total expenditure, whatever actual expenditure paid by employer, now you need to reduce actual expenditure for official purpose or as per fixed government limit. Whichever is higher, this value needs to be reduced from the total value, and the balance would be my taxable value. So little complicated, you can say, but if you go logically, you will find this value very easily. What do we need to do? We just need to find out the cubic capacity of the car, which would be given in the question. Driver provided, not provided. So if driver provided, you have to add 900 rupees fixed. In the car, fixed value 1800 or 2400. You need to compare it with the actual expenditure for official purpose if given in question. Higher is going to be reduced from total payment made by employer. Balance is your taxable value. Suppose this higher comes to 42,000. Just suppose. It's not 32,400. Suppose it is 42,000. Then when you will reduce it, the answer could not be in negative. It maximum could be 0. No exemption, no deduction can make your income in negative. That could be nil only possible. Understood? How do we need to calculate if the car has been used for both purposes? And a very interesting thing, everything would be given in question. This would be given in question. This would be in question. Car capacity, driver information would be in question. You just need to remember these car limit, 1800 rupees per month, 2400 and 900. Suppose if the car has been provided for 8 months, then all calculation need to be done for only for 8 months. Understood? Sure. SK is saying completely understand. Very good. Very smart generation you are. Good. So this you can see, if I'll show you the full diagram. The first part we were talking, car owned by employee. This has been complete. Car owned by employee, expenses met by employee, the perquisite met by employer, 3 cases. Full official, nil taxable. Full personal, full taxable. Both purpose, find out the full payment made by employer, and higher of actual expenditure for official purpose or a fixed value with driver, without driver. Higher needs to be taken and it is going to be reduced from your taxable value. Understood? From the total value, so you will get your taxable value. Chalo, now moving to the next case, when car is owned by employer. So if the car is owned by employer, let me drag that case over here because I need a space. And this diagram has been already uploaded. So that is for a specified employee only. And this is the case when car owned or on lease by employer. So suppose now employer provide his car to an employee. So it's a big thing. Suppose you are going to join a company, what kind of car facility perquisite they will provide? They will say, use your car, we will pay the fuel expenditure, etc. is it this would be a general case, or for all employees they are start providing company's car? Of course, the company will provide the car only when that employee would be a special employee. That's why it is going to be taxed only in the hands of a special employee when car is owned or on lease by employer. Okay, if I'll ask you now, in this second category of case, because car has been received by an employee from employer, so automatically car is a perquisite because I am using an asset of employer. So that is a perquisite. In first case, only the expenses needs to be taxed because car is mine. So what expenses employer is paying, that could be a perquisite. But in this case, because I am receiving a car from employer, so initially car, that means asset, and the expenses both could be the part of my perquisite. So car owned or on lease by employer. Now we need to see who is going to pay the expenditure. And suppose expenses met by, there would be two situations. Either expenses met by employee or expenses met by employer. So if you logical see, if car is owned by employer and expenses met by employee, so can you identify what could be the perquisite in this case? Car is the perquisite or expense is the perquisite? Of course, the car could be perquisite in this situation. Because car owned by employer and if expenses is going to be paid by employee, so only car is the thing which could be taxable in this case. And if suppose car owned by employer and expenses also paid by employer, in this case, car as well as the expenses, both could be taxable as both are perquisite. So everything is so logical in this perquisite. If you'll follow the step, the first thing to understand what I am getting free. So if car owned by employee, first case, in that situation, only expense could be taxed. In second case, I am getting a car. But if the expense is also met by employee, then only car thing can be taxable. Forget about the expenses treatment. But if the car and expense both paid by employer, then both could be taxable. So as I was saying earlier also, if you are able to find out the correct case, you would be able to calculate the value correctly. Moving forward. Now, if car is owned by employer and expenses met by employee, there would be again three conditions. The car is used 100% for official purpose. What should be the taxable value in this case, students? If the car has been provided by the employer, expenses paid by employee, what should be the taxable value if the car is used 100% for official purpose only? Anjum is saying, दो का एक समझ नहीं आया. अंजुम, ये क्या क्वेश्चन है? दो का एक समझ नहीं आया मतलब सेकेंड केस का फर्स्ट वन. समझो आप किसी कंपनी में जॉब करने जाते हैं, आपका एम्प्लॉयर कहता है ऑफिस से घर और घर से ऑफिस आने के लिए आपको कार कंपनी दे. कंपनी की कार है, ये पार्किंग में है, ये लो चाबी ले जाओ. लेकिन पेट्रोल का एक्सपेंडिचर, फ्यूल के एक्सपेंडिचर आपको खुद करने पड़े. First case, we are discussing that when car has been provided by the employer, but all the expenses of car maintenance needs to be done by the employee. So that is the first case. So in that case, if you are only using employer car for office till residence and vice versa. 100% for official purpose. Meg is saying, so driver additional concept is not clear. Can explain with one more example. We will solve question. As I told you, this is a complex perquisite having multiple provision. Just try to understand the perquisite. When we will solve some illustration, you will be able to understand how to taxable that driver, etc. And I can guarantee this. Once we will complete this perquisite, you will think how complicated it is. But I will ask you that please revise this perquisite today. I will give you 2, 3, 4 illustration also. And the day after tomorrow, you will say this is very easy perquisite. Okay. So if used for official purpose, the taxable value would be always nil. Absolutely correct. So now second case. Suppose if the car has been utilized 100% for personal purpose. Logically, just think about it and tell me, what should be the taxable value of perquisite? Car value or expenses value? What should I find out for the purpose of taxability? Should I start thinking about car value need to be taxed as a perquisite or the expenses? In this case, because expenditure has been done by employee. So the car is free for me. So the value of that asset needs to be taxed in this case. Vishakha, not expenses. Expenses, so we have done. We are discussing a case when expenses met by. Who is matching expenditure? Employee. So how, and I have written that in this case only car value could be taxable. So if it has been used for official purpose 100%, nothing is taxable. But if with this situation, car has been utilized for personal purpose only, then we cannot tax the expenses because expenses the employee is doing. So what employee is getting for free? He is getting car free. So in this case, only car value can be taxable. Now tell me one thing. Car is a movable asset or immovable asset? I would like to know. Car is movable asset or immovable? Of course, movable. So in the provision, whatever provision we have discussed till now, in any provision, we discussed any movable asset if used by employee. The taxable concept, in any case, we have gone through the movable asset taxable value if used by employee. Think about it. The correct answer is yes. Under salary topic, we have gone through a case in which there was movable asset used by employee, provided by employer. And that is in salary part 2, not part 1 provision. In part 2, there was a situation when we have gone through with the concept when employer is providing you the movable asset and you are using it for your personal purpose. Very good. Isha, find it out. Rent-free accommodation, furnished accommodation case. I also asked it today in the starting of the class. Furnished accommodation case. If employer is providing you furniture, furniture is what? It is an asset, movable asset. Who is providing? Employer for your personal purpose. So if you have already gone through with a concept of movable asset used by employee for personal purpose. What was the treatment in case of furniture for rent-free accommodation? If it is owned by employer, 10% of cost. If it is on rent, then we take the rent charges. Same copy-paste provision use in case of car. The same concept is applicable, exactly same. So the taxable value in this case would depend upon either employer owned the car or on rent. So we need to see if the car owned by employer, then we will add the perquisite value. Same in case of furniture, 10% per annum of original cost. Or if on lease or rent, then the taxable value in the hands of employee would be rent charges. Again, as I've told you, as the case, this cannot be lower, higher, as the case. So if the car has been owned by employer, you need to take the 10% per annum. Suppose it's for 7 months, then we have to proportionate it in case of 7. And if it is for 10 months, then we need to proportionate it for 10 months. Or if it's for full year, then we can take the full value. Suppose the car value is 10 lakh rupees provided by the employer to employee. Employee is doing the expenditure, 100% used for personal purpose. Then 10% of 10 lakh, 1 lakh would be the perquisite value in the hands of employee. Understood? So movable asset in whole salary chapter, when there is a movable asset has been used by the employee for private purpose. In that situation, always this rule will apply. Owned by employer 10%, not owned, rent charges. Now, third case. For the purpose of examination, I believe this both cases most important. Whether it's in the first part or in the second part, when the car has been utilized for both purpose. And the very good news, we have a fixed limit for it. Fixed taxable value. As there was a fixed limit for reduction, that was 1800, 2400. Now, here is the fixed taxable value. You do not need to reduce it from anywhere. This is going to be taxed based upon your car cubic capacity. So it's up to 1600 cc. And if the car has been utilized for both purpose, 600 rupees per month is the taxable value. More than 1600 cc, 900 per month would be the taxable value. And again, if driver provided, the value remain the same. ₹900 per month. So either it would be 600 plus 900 driver, 1500 rupees per month if driver is there. Or if this car case, then it would be 900 plus 900, 1800 rupees per month. That is going to be directly your taxable value, not need to reduce from anywhere, etc. So this is an easy case. You just need to read the, learn the amount which has been mentioned. Now, if you will go through with this diagram, you will see in the first case, only expenses could become the perquisite because car is owned by employee. So only expenses we were taxing. In the second case, till now, the second case, when expense met by employee, only car value we were taxing because expenses met by employee. But in the last case, if you'll see, this is the highest taxable case because as a perquisite, car owned by employer and expenses also paid by employer. So this case would be the highest taxability case in which an employee is enjoying car as well as all the expenditure. So technically employee is not paying anything. Again, in this case, there would be three situations. 100% used for official purpose. So employer provide you a car and he is going to reimburse all the expenditure. And still you use the car only for official purpose. So in that case, the taxable value would be nil as usual. Suppose if you utilize that car for 100% private purpose, this is the highest taxable case, highest. Because in both cases, some part is going to be taxed and some is going to be not taxed because official also there. But this is the highest taxable case in all the cases. Because you are having free car, because car is owned by employer. And all the expenses also met by employer. All the expenses. You need not to incur anything and you are using that car for 100% private purpose. So what will happen? It's easy. Again, you need to tax the car. So if it is owned by employer, in this case also you need to take 10% per annum cost. If it is on rent, you need to take the rent charges. So as the case, so one value would come from over here. You need to add both. For the purpose of car park, you need to find out this value. And expenses, simple. Actual expenses paid by employer. So suppose this value is A and actual expense is B. So the taxable value would be in this case A plus B. Everything would be given in question. Car value, rent charges, total expenses. You just need to tax both. Now the last case. If the car has been utilized for both purposes. And a very good news, in this case also, the taxable value is fixed. Like in third case of this, there is a fixed taxable value. In this, the taxable value again fixed. Up to 1600 cc, it would be 1800 rupees per month. More than 1600 cc, 2400 rupees per month. We need to add 900 rupees per month if driver. So again, either it would be 1800 plus 900, 3300 per month taxable value, or 2700, or 2400 plus 900, 3300 would be the taxable value. And if you'll see, you will find out a very interesting thing. In this case, what we utilized for the purpose of reduction, 1800, 24, 900, what we utilize for the purpose of reduction, exactly same value is become taxable over here. So if you already remember this point, this is not a new value. But in this case, this has been utilized for the purpose of reduction. But this case, this is directly going to be taxed. No reduction, nothing. This would be your taxable value. So this is a fixed case. And this is also a fixed case. What is the meaning of this fixed case? Understand it. In rent-free house, there was a note. We have discussed that if for any perquisite, you are recovering any amount from employee, that is going to be reduced from the taxable value. For example, if the rent-free house taxable value, suppose 18,000, and question says that from employee you are charging 500 rupees per month for rent-free house. So that means for the year you are charging from employee 6,000. So 12,000 would be the taxable value. And this is applicable for all perquisite, any perquisite. I've told you this thing. But this rule will not apply in these two cases because these are government fixed limit. These are government fixed limit. Even in these cases, if anything has been recovered from employee, you cannot reduce it. For example, suppose this is the case, 2,400 plus 900, 3,300. Suppose for 10 months, this facility has been provided by the employer. So total taxable value is 33,000. Now the question says that in this situation, employer recover from employee 1,000 rupees per month. Employer recover for this car facility from employee 1,000 per month. So we cannot reduce it because these two are fixed government value. We cannot reduce it anything for whatsoever purpose out of these two fixed value. If that would be a case of this situation, or any other situation, you can reduce it, but not in these two cases because these are fixed taxable value. That was the car perquisite. I hope you enjoyed it. And I believe you must be feeling what is this difficult, why it is so complicated, it is so difficult to understand. So if as a whole chart you will see it, maybe that is a correct thought. In place of, if I would be there in your place and when I was there in your place, I was also thinking that what is happening, why it's so complicated. I am assuring you, just try to go through this chart one more time logically after our session, one more time logically. If possible, take the printout of the chart I have uploaded, or you can take the screenshot of this chart as you want. So just go through this chart one time logically. Don't try to just read it. Just try to understand it logically. Then what illustration I am going to give you for today class in case of rent-free car perquisite, try to solve it. You will find out that this is not difficult at all. The correct process to solve this question, you have to identify three things in a question. First of all, find out who owned the car. If employees owning that car, then forget about whole this second scenario of employer owned the car one. Okay. If employer owned the car, just forget about the first case scenario. All these cases would be irrelevant. So the question says, first of all, you have to find out who owned the car. The second, who is actually paying the expenditure and the purpose of the car, the utilization part. So if you are able to find out, to crack this, to decode it, who owned the car, who is paying expenditure, and the utilization. And after that, if you're able to recall, okay, this case is applicable, that would be only a 1 minute. You are able to solve this question. And it's a promise. I will show you this thing after today's class. Okay, Mr. Mohammed is saying, sir, in case of employee, we reduce the amount from taxable value. But in case of a specific employee, we will add the fixed amount to the taxable value. Yes, exactly. In case of a specific employee, this value is going to be directly taxed. You need not to add it anywhere. This is your taxable value, would be the part of your salary income. Miss Mehak is saying, it's clear, sir. I write with you, sir, for diagram. It's clear. Well done. Okay. Now moving on to the provision. And if you are thinking this is difficult, let me show you what difficult exactly means. Try to learn from this diagram. Just try to learn this. You will not be able to understand it in hours. But if you'll go through with the diagram and then if you'll go through this table, you will be able to understand what exactly going on. So if there would not be any diagram and I would going to teach you with this perquisite with these kind of table that if this is the case, this would be taxable value. In this situation, this is going to be taxed as it has been written in the act. Let me tell you, it's going to be very, very, very difficult. But yes, you need to go through with this table. Just read it out. So you will find these kinds of note. It will help you. This is, you can see the fixed taxable value, even some amount recovered from employee. So this is the case we were discussing, fixed case. There are two fixed case, both are over here. Okay. For other automotive conveyance, if except a car, the employer is providing you a facility of two-wheeler, etc. That would fall in this category. You can read it yourself. It's very simple. The notes, please read it also. Now, valuation of benefit of provision of domestic servant, we have gone through with this. Valuation of gas, electricity, already discussed. Education facility also discussed. We will start it from 6 point today. That is free or concessional tickets. The value of any benefit or amenity resulting from the provision by an employer who is engaged in carriage of passenger or goods to an employee or to any member of his household for personal or private journey. I believe that you should read it yourself. These are very general provision. In all these provision, only a single concept is there. If anything has been provided by the employer free, then the market value of that facility is going to be taxable if it has been used for personal purpose. 7th also. A very interesting and important is this. Interest-free or concessional loan. So if your employer provide you any loan that you need to repay, of course, but the benefit is they are charging less interest or they are charging no interest on that loan. So that would be a case of perquisite in the hands of employee if employer is providing interest-free or concessional loan. The value of the benefit to the assessee resulting from the provision of interest-free or concessional loan for any purpose made available to the employee or any member of his household. Now, the concept says that if you are receiving these concessional loan, whether interest-free or at a lower rate, there would be two situations. In two cases, there is nothing is going to be taxed. If the loan amount is up to rupees 20,000 only in a year. So suppose an employer provide 20,000 rupees loan interest free to its employee. So in this case, this perquisite would not be taxed because the value of loan is very low. So up to 20,000 rupees of loan, this perquisite is exempted. But if the loan has been taken for specified diseases, for the treatment of specified diseases like cancer, etc. Your employer says, we are providing you 10 lakh rupees interest-free loan. And the purpose of that loan is to utilize for the treatment of specified diseases of employee or any of his family member. Then again, that is not going to be a taxable perquisite. So for other than specified disease, only benefit up to 20,000 rupees loan. And if it is for a specified disease, that is unlimited. As I have told you, income tax is an emotional act. So whenever there is about life, health, etc., they provide you benefit. So these are two exemption, or you can say two benefit under this perquisite when this is not going to be taxed. But for other cases, this is going to be taxed like this. Suppose your employer provide you a loan of 20 lakh rupees at the rate 3%. So now we need to understand whether it's a concessional rate or not. So for that purpose, SBI rate is the benchmark. State Bank of India rate for this kind of loan is said to be the benchmark. So in the question, the SBI rate would be given. Suppose the SBI charge for this kind of loan, the rate is 10%. So what you are going to get from the market at the rate 10%, you are receiving it from your employer 3%. So how much is free? 7%. So this is your taxable value. You need to calculate it upon the loan, and that would be your taxable value. So it is very easy to solve. In this example, that would come around 1,40,000 rupees. So it is very easy, but there is a twist. If the loan value remain the same for full year, that means there is no repayment involved, then the calculation is too simple to solve, as you can see in this example. But that is not going to be happen in the examination. They will include some twist. Because the provision says this interest, this free interest, 7%, need to be calculated on the loan amount outstanding at the end of each month. At the end of each month. So suppose if on this 20 lakh of loan, 50,000 principal amount is going to be repaid at the end of each month, then you need to do this calculation for 12 times. Because suppose in April end, loan was 20 lakh sanction. In April end, 50,000 has been repaid. So in the April end, you have to calculate this 7% on 19,50,000 value. So this for 1 month, that would be interest taxable value of April. Then for May month, you need to take 19 lakh rupees. It's just a mathematics, but the process would be lengthy. 7% for 1 month on 19 lakh. Then 18,50,000, then 18 lakh, then 17,50,000. So you need to calculate interest 12 times if the repayment has been made monthly. So that kind of question, I believe, must be in the examination, not the simple one. And we will solve that kind of illustration. It has been given your study material. We will solve it today. And why it is happening? Because if the provision is this. During the relevant previous year by employer to any person on his behalf shall be determined a sum equal to interest compute at the rate charged by SBI as on the first day of the relevant previous year in respect of the loans of the same purpose advance maximum outstanding monthly balance reduced if any actually paid by him or any such member of his household. So what is the maximum outstanding balance means? The aggregate outstanding balance at the end of each month on the last day of month. No interest if the loan is up to rupees 20,000. No amount limit if it is for medical treatment. Let me show you with the help of an example which has been given in your study material. SK Inam is saying in question, car is used for both personal and official purpose given separately. Then official purpose and personal purpose, what will be the treatment? What will be the treatment of personal use expenses? Sir, I can't understand car owned or leased by employer. Second case, employer, which is 100% for private purpose. Okay, let me tell you. If the car is owned by employer, we will solve this question, but before that, let me clarify Mr. S.A. Inam problem. देखिए, the second case was car owned by employer. Just go logically. There would be two situations always. that who is paying expenses. So if expenses is paid by employee or expenses is paid by employer. Two situation again. There would be three cases. If car owned by employer and expenses paid by employee, and if it is for official purpose, taxable value would be nil. If it is for private or personal purpose. So in this case, what is with employee, which is free? The car is with employee because expenses met by employee. So technically, what is employee is using for free? The car. Car is an asset. So we need to tax a asset which is used by employee for personal purpose. So in that situation, either the car owned by employer, that would be given in question. So we will take 10% of cost per annum. If this car is on rent, then we will take the rent charges. If that is for both, then we have fixed limit. The utilization is irrelevant. Whether it's 20% personal, 80% official, 60% personal, 40% official, irrelevant. If it is a mixed case, the value would be 600 rupees per month or 900 per month plus driver if provided 900. This is your answer. Taxable value need not to reduced or add into any value. If now car and expenses both by employer, and if official, always nil. If full personal purpose. Now understand, car employer, expenses employer. So do we need to taxable one or both? Both we need to taxable. The car taxable value and the expenses. So again, for car purpose, 10%. Or rent charges, we need to take any of it. And for expenses, full expenses. Add 10% or rent charges with this expenses value and you will get your taxable value. If that is for both, then the 1800, 2400 or 900 would be the taxable value as the case may be. Okay. Still, if there is any confusion, let me tell you, because it's the most complicated perquisite from salary head, except the one which we did not discuss yet. Remember that provident fund concept I have told you we will discuss at the last class. Except this, the second number is car perk value. You have just encountered the one of the most difficult perquisite of salary chapter. It will take time you to understand. After the class, revise it one. Solve question which I am going to give you today. Then you will be able to understand this perquisite very easily. So just be patient, okay? So now moving on to that, study math question regarding you can see the car perquisite value in your study material. It has been mentioned like this. It's running till now. This is the interest-free concessional loan provision I was saying. In this case, there is an illustration what I would like to discuss with you. So you will understand how to calculate this value. So this is illustration number 20, in which there is a not 20, sorry students, maybe 21. Yes, this is the illustration. In this illustration number 21, the point number Sixth talks about interest-free concessional loan provision. You can see the question says housing loan 6% per annum. Amount outstanding on 31st March 25 is 6 lakh. Shri Bala pays 12,000 rupees per month toward principal on first of each month. SBI rate has been given 10%. So the concessional rate is 4%. The benefit you are taking 4%. The opening balance in our previous year on 1st April 25, because at the end of the year is 31st March 25, and 6 lakh was the balance on 31st March 25. And 12,000 principal amount he or she paid on 1st of every month. So on 1st April 25, the 12,000 repayment has been made. So the taxable loan would be, or the loan value would be 5,88,000 for the month of April. At the end of month, how much would be outstanding? 5,88,000, because on 1st of April, the 12,000 repayment has been done. So at the end of the month, the remaining value would be 5,88,000. In May, it would be 5,76,000. For every month, you have to calculate 4% for each month. Let me show you the solution. So this is proper mathematics calculation, no difficult thing, but you have to do this multiple calculation one by one. So April end value is 588, May 576, 564, 552, 540, 528, etc. and so on. For each month, you have to calculate. For each month, you have to calculate the interest separately. So on 588, they must calculate 4% into 1 by 12 for a month. Same in case of this 1 by 12. So the aggregate of these interests would be your taxable perquisite value. So maybe you are thinking this is huge calculation, but the same calculation you need to do multiple times. There is no new calculation in this example. We have another way to solve this question to reduce your calculation part. So that could be done like this. You need to find out the maximum outstanding balance at the end of each month, as you have find it out every month. Now you have option. Either you can calculate interest separately like this, and then aggregate would be your taxable value. But under mathematics, you can solve it in one other way also. Take the aggregate of all these together. The outstanding balance at the end of each month, the aggregate would be 62,640,000. Do not calculate interest monthly. It will need to do you calculation of interest 12 times. Just do it at once. Total, now apply 4% for 1 month. Your answer would be same. In both the cases, you need to find out the balance at the end of each month. But in this solution part, you have to calculate interest 12 times. So you need to use calculator 12 times. Even if one interest calculation go wrong, your total answer would be wrong. So there would be more work you need to do. In this case, you just need to aggregate this value and only one interest you need to calculate. You will get the total value correctly. So it's your choice. You can solve it by either way. It's mathematics. We have multiple options to solve a question. But this way will reduce your calculation time and the probability of mistake would be less because you just need to calculate one time interest. In this, even if once you mistaken, your interest calculation go wrong, your answer would be completely wrong. So it's your choice. You can solve it by either way. Sridhar saying 10% is prescribed by law. In case of car perquisite, if you are asking yes, in case of this Concessional loan, that could be changed depend upon the SBI rate. It could be 10, 11, 12, whatever it is, it would be given in the question. SK now is saying, if question is silent regarding at the time of beginning and ending, what to consider? So SK now, the person who is preparing examination paper, of course, that person is going to be very smart one, and he know this kind of information would be in question. You cannot assume it. That would be given in the question, the amount which is at the end of the month or the starting of the month. So do not worry about it. There would be information. Even if the repayment is at the end of the month, still the calculation would seem will remain the same because we need to take the amount at the end of the month. If 12,000 is not paid on 1st of April, but at 30th of April, still we will take 5,88,000 for April month because we need to take the amount at the end of the month after the repayment of principal amount. So, student, is there any query you can ask? Then we will go for a short break. I believe there is no query here. So, Ashok sir, can we take a short break? have taken your tea, coffee, water, etc. So we just discussed the provision of interest-free or concessional loan. Now moving forward, next point is valuation of traveling, touring, and accommodation. So there are two terms. One is technically traveling and touring. So tour generally refers to official purpose. That is called business tour, etc. So tour terms actually refers to that the journey has been performed for official purpose, where travel is for personal purpose. So as we all know, whatever is for personal purpose can become a perquisite. So in the same way, where traveling facility is provided not to all the employees. So if the traveling facility has been provided to some special category of employee, suppose there are 50 employees in the organization, but travel facility has been provided only any 2 or 10 or 5 number of employees. So the taxable value would be value at which such facilities are offered by other agencies to the public. So whatever is the fair market value of that travel facility is going to be taxed over here. Now you can understand, or you should understand, we have discussed the leave travel concession. So that is different, and this travel is different because in leave travel concession, there is only traveling expenditures are met by employer. But in this case, the accommodation, the full package has been paid by the employer. The traveling expenditure, the accommodation, the food, etc., etc. So both are different. So if LTC provision has been asked, you have to answer according to the provision, whatever we have discussed under section 10, subsection 5, I guess. And if there is a travel which include accommodation, then these provision needs to be applicable. So if it is not given to all employee, the market value of that package going to be the taxable value. The market value of package would be given in the question. If this traveling facility is given to all employees, it's a general facility provided to all the employees of the organization, then whatever actual expenditure paid by employer would be the taxable value in the hands of employee. Very simple. Now, tour is generally for business purpose. So why it is taxable? It should be exempted. Yes, it is exempted. But suppose there was a business tour of 5 days. But after 5 days, extra 1 days has been used by employee for the purpose of personal purpose, for roaming or to travel in that city, etc. So if the tour has been extended as a vacation for 1 or 2 days, then for those 1 or 2 days expenditure paid by employer is going to be taxed as a perquisite. So where official tour extended as a vacation, so for that duration payment made by employer would be the taxable value. Suppose business tour is for 5 days, there would not be any taxable value. But you are accompanying any family member of yourself. An employer say, okay, you can take that family member with yourself. We will pay the amount of his or her expenditure also. So whatever amount the employer is paying for that member of his household is going to be a taxable value in your hand. If employee is on official tour and expenses are incurred in respect of any member of his household, so whatever expenditure has been paid for that member is going to be the taxable value. Next is fees for concessional food, non-alcoholic beverages, etc. So if any tea, refreshment provided during office hour, no taxable. Free meals, non-alcoholic beverages during office hour, nil taxable. Provide in a remote area. So if it is in a remote area, then that is non-taxable. But any free meals provided other than remote area with vouchers or token which is non-transferable, then up to 50 rupees per meal, the taxable value is nil. And this would be available only in case of optional tax regime. For example, how it will come in the examination. Suppose the question says that employer provides you non-transferable token for the free meal facilities. So for 300 days, they have provided your free token and the value is suppose 90 rupees. So you have utilized 90 rupees per meal for 300 days for single meal every day. So out of this 90, 50 rupees per meal value is going to be exempted and 40 rupees per meal into 300 days would be your perquisite value. So if these vouchers are transferable, so listen very carefully, it is non-transferable, then you can claim this exemption. Suppose the question says these vouchers are transferable, then no exemption, full value is going to be taxable. Okay. In any other case, if the benefit of food has been provided on bill reimbursement basis, that employer asks to the employee that you can go to any restaurant, eat food, pay over there, submit the bill, we will reimburse it. Then in that situation, full amount is going to be taxed, whatever has been paid by the employer. Only in case of non-transferable coupon, the 50 rupees exemption exists under optional tax regime. Again, very simple provision. Value of any gift, voucher, etc. So if your employer provides you any gift, voucher, etc. during the year on any festival or on your birthday, etc., then up to rupees 5,000 is taxable. So if that voucher, token, or gift value is below 5,000, the aggregate amount of the previous year shall be taken as nil. Now there is a two opinion in this case. Suppose you have received 7,000 rupees gift in a year. Now, view one says in this case up to 5,000 exempted, only 2,000 is taxable. But a second opinion also says that this exemption is applicable only up to 5,000 if the value exceed of the gift. Then full value needs to be taxed. So there are two opinions regarding the taxability of this perquisite. In the examination, you can opt any of the view, either this 2,000 you can taxable or 7,000, but please write it down as in working note as an assumption that which actually you follow. Whether you have taken the excess amount as taxable or once the value exceeding 5,000, you tax the full value. Choice is yours. Credit card expenditure, etc. If it is for personal purpose of employee, that is going to be taxable. You can read it yourself. Club expenditure, if employer has a membership of any club and employee enjoy the benefit of club and the employer is going to reimburse that expenditure, then whatever amount has been reimbursed by the employer for the personal purpose of employee, that is going to be a taxable perquisite. Again, a very simple concept. You can read it yourself. Now, valuation of use of movable asset. Remember, whenever there is movable asset in the question, movable asset, the taxable value would be always the same. If it is owned by employer, 10% per annum of the cost. If it is on rent, then rent charges. We have seen this concept in the rent-free house furnished accommodation case also, and in case of car perquisite also. So exactly if there is any other movable asset other than car and furniture, still the concept would remain the same. Use of any movable asset by the employer, the important point is this. If the employer provides you any laptop and computer, again movable asset, but taxable value has been nil. It is exempted if the laptop and computer has been provided by the employer to the employee. Even for personal purpose, whatever it is, in case of laptop and computer, it's always free. Next, car and other asset. We have already gone through with the car rules. The same rule is there, 10% or rent paid. Other movable asset, you can see the same provisions are there. 10% per annum of the actual cost or rent paid as the case may be. Point number 14 is new. Point 13 was saying that if the employer give you any movable asset to use, then the treatment would be like this. Now the employer is transferring, actually selling his movable asset at a concessional price to the employee. Suppose car has been sold to an employee, then this point number 14 would be applicable. Furniture has been sold to an employee, 14 point applicable. Car given for use, furniture given for use, point number 13. Laptop given for use, point number 13. Laptop given for sale at concessional value, then point number 14 would be applicable. So for the purpose of examination, point 14 and point number 13, bifurcation you should keep in your mind. Mr. Aditya is saying, sir, if they give immovable, then it may taxable or not. Aditya, we have already gone through with the immovable asset given for use, that is rent-free house. What was rent-free house? The unfurnished rent-free house was an immovable property which has been given to an employee for the purpose of personal utilization. So we have already gone through with the concept of immovable property given for use. So if any movable asset has been transferred, then there would be three situations. These assets has been divided into three categories. Either that would be computer and electronic items. Electronic item means data storage devices like digital diaries, printer, etc. Not TV, fridge. TV and fridge would be included in other category. So computer and electronic item means those electronic items which is associated with computer. Those are data storage devices. Motor car and others. So if your employer transfer you any computer and electronic item, then you have to see whether that item has been transferred to an employee at market value or less. So if it is transferred at market value, then there would not be any taxability. But if it has been provided at concessional value, the difference is going to be the perquisite. For example, suppose employer purchased a laptop for 1 lakh rupees on 10th October 2023. Okay, so this taxable value needs to be find out, but before that we have to find out the market value as per these provisions. So laptop has been purchased by employer on 10th October 2023 and it has been transferred on 9th September 2025 to employee for rupees 40,000. So question would be like this, that the purchase value, purchase date would be given in the question, the transfer date and the value on which it has been transferred to employee would be in the question. Now I need to see that the employee pay 40,000. So whether it is higher than the market value or lower. So for that purpose, these rules helps. These rules tell you how to find out the market value. So in case of computer and electronic item, the provision says whatever was the actual cost, you need to reduce 50% of the cost for each completed year of use by the employer. So for each completed year, you need to take 50% as depreciation technically on reducing balance method. Reducing balance method. So these are not the normal depreciation rate. In case of business head, the normal depreciation on computer is 40%. Please do not compare these for those depreciation rate. These are for salary purpose to find out the market value. So in our example, if I'll ask you that this is the date of purchase, this is the date of sale. So how many completed year this laptop has been used by the employer? So for that number of year, we have to apply the depreciation, which would be 50% for each year on reducing balance method. So how many year we have utilized this computer in this example? SK Inam is asking, sir, if employer permanently transfer immovable asset at concessional rate, so those provision would be under capital gain chapter. So if any immovable property has been transferred permanently, so no salary provision is applicable. That is under capital gain. Okay. Vishakha is saying 1 year, Isha is saying 2 year, SK Inam is saying 2 year. The correct answer is 1 year. The complete year we need to take, complete year. So from 10th October 23 till 9th September 25. The 2 year needs to be completed on 10th October 25. So it is almost 1 year and 11 months, not 2 complete year. If you'll find out the time duration, it would be 1 year and 11 months. So we need to take only the complete year. So only 1 year depreciation we can charge on it. So 1 lakh rupees, 50%. So the value of this laptop or computer would be 50,000 as per salary provision. And this 50,000 value computer or laptop you received for 40,000. Is this a perquisite or not? Suppose a 50,000 rupees value of employer asset, an employee received for 40,000. So is it perquisite or not? How much is free? The free is 10,000. So 10,000 would be the perquisite in the hands of employee. Understood? Suppose employee pay 55,000 for this laptop instead of 40,000. Suppose the question says employees paid 55,000 for this laptop. In this case, there would not be any perquisite because you have paid more than the value. There is nothing free. So if the motor car has been transferred, the same concept applicable, the rate would be in place of 50, only 20%. The depreciation would be 20% for each completed year on reducing balance method. Suppose if this example belonged to a car, that car purchased for 1 lakh and payment is 40,000. Then for 1 year, we will reduce 20% depreciation. So 80,000 rupees car employee received for 40,000. So the perk value would be 40,000. In any other asset, actual cost less 10%, but very, very important, the method has been changed now. Now it is SLM method. So it's not reducing balance method, it's SLM method. That means depreciation would remain the same. For example, suppose there was a television of 1 lakh rupees purchased by employer on suppose 4th July 2021. This has been sold to employee on 5th August 2025 for rupees 25,000. Now, can you tell me the complete year of utilization in this example? That would be 4 years. From 4 July 21 till 5th August. So 4 years, 1 month, etc. So we need to take the years. So for 4 years, now we need to charge depreciation at the rate of 10%. And as per SLM method. So DAV would remain 10,000. So for 4 years, it would be 40,000. So 1 lakh rupees value and 40,000 DAV. So the value would be 60,000 rupees. And 60,000 TV, the employee has taken at 25,000 rupees. So balance 35,000 is going to be your taxable value. So please remember the rate 50%, for car 20%, other 10%. Complete year, same in all three cases, but the method will change in third case, SLM method. For car and computer, it is reducing balance method. Other benefit, you can read it yourself, general provision. Again, if the employer is provide you its sweat equity shares or any specified security to an employee at concessional rate, then again, whatever is the market value and whatever has been charged from the employee, the difference would be the taxable value. Suppose employer shares market value is 500 rupees per share. 1,000 share provided to employee at the rate 200. So how much is free? 300 rupees per share is the perk value. So for 1,000 share, it would be 3 lakh rupees. Very simple. The market value would be given in the question. So if the employee is paying less than the market value, the difference would be the perquisite in the hands of employee. These are for reading purpose. Not even, you can just read it, closing price, meaning, etc., but not required because in the examination, market value must be given. Now we are coming to discuss the deduction from salary. In the starting, we have seen the format that up to gross salary, you have to calculate your salary. After the calculation of gross salary, there could be 3 deductions. In case of default tax regime, there would only be one deduction, that is standard deduction. But if you do fall under optional tax regime, there would be standard deduction, there could be entertainment allowance deduction, and there could be professional tax deduction. So 3 deductions could be there. The income chargeable under the head salary is computed after making the following deduction. You can see standard deduction, deduction available under both regime. Entertainment allowance deduction only under optional tax regime, and same in case of professional tax deduction under optional tax regime only. The standard deduction out of gross salary, you can claim the amount of gross salary or 50,000 lower as deduction under optional tax regime. In case of default tax regime, the amount is 75,000 or gross salary, whichever is lower. Entertainment allowance deduction is available only for central and state government employees. Only for central and state government employees. And how do we need to calculate this deduction? Actual amount spent is irrelevant in case of entertainment allowance deduction. Minimum of the following is going to be allowed as deduction in respect of entertainment allowance deduction. If excise the option of shifting out of the default tax regime, that means it is only available under optional tax regime. The actual amount of allowance we received 20% of basic salary and 5,000 rupees. So the lowest is going to be claim as deduction in respect of entertainment allowance. Now, professional tax deduction. Employment of professional tax will be allowed as deduction in the year in which it is paid. If this tax is paid by employer for employee, then first it will be included in the salary as perquisite, and thereafter it is allowed as deduction only under optional tax regime. So professional tax is a kind of a tax paid by employee or employer. Suppose employer paid professional tax on behalf of employee, 2,000. Then this 2,000 rupees is going to be add back in the perquisite column of employee, and then he can claim the deduction after gross salary of this 2,000 rupees only under optional tax regime. If this professional tax is paid by employee himself, employer does not pay it, employee paid himself, then nothing is going to be included in his salary as a perquisite, but deduction can be claimed under professional tax deduction if he is under optional tax regime. So that was the salary provision. We have discussed all the salary provision except that provident fund taxability provision. That would be discussed in the day after tomorrow class. One more topic we need to discuss, that is relief under section 89, which would be applicable in case of arrear of salary or advance salary. So two topics yet to discuss. One is the provident fund taxability of perquisite case, and one is the relief. These both topics we will take in the next session, that would be day after tomorrow. What to do now? There is 2 and 3 basic concept in case of salary, which we do need to understand before solving any question. A very interesting provision of salary. Generally, basic salary has provided like 50,000 per month, or suppose 60,000 per month in questions. So generally basic salary would be given in the question like employee salary is 1 lakh rupees per month, 2 lakh rupees per month, 80,000, 50,000 per month base. So we take that as a basic salary multiplied by the number of months he is under that organization. But there could be a special kind of salary. And what is this special kind of salary? This special kind of salary is called range salary. Suppose in the question, your basic salary has been given like this, 50,000 dash 5,000 dash 80,000. And it has been given on 1st July 2023. Suppose the question gives you information like this, that Mr. A is employed in any organization and he is receiving salary from 1st July 2023 like this, 50,000 per month dash 5,000 dash 80,000. So this is your receiving salary monthly. Now this is called range-based salary. So if this kind of salary has been given, then we have to find the basic salary for our previous year. That would be from 1st April 2025 till 31st March 2026. Now, what does the mean of this range salary? Please understand this. The range says that whatever the date has been given, the employee salary is monthly 50,000. The first range change says that exactly after 1 year, from the date it has been given in the question, exactly after 1 year. That means from 1st July 2024, there would be an increment. So this reflects your increment in your salary after exact 1 year. So your salary would be 50,000 per month from July 23, then August 50,000, then September 50,000, and so on. But after 1 year, exactly 1 year, from 1st July 2024, now your monthly salary would be 55,000 per month. Understood? And this is going to be increased every year. After every 1 year, it would be increased by 5,000. So in next year, it would be 60,000 per month from 1st July 2025. Then from 1st July 2026, it would be 65,000 per month. So this increment tells you a range that this salary is going to be increased by 5,000 every year from the date which has been given in the question until it reaches to 80,000. So after almost like 65 or 6, after 4 years, it will be 80,000 per month. And once it reaches 80,000, now it will remain 80,000 for future years. So the range salary, you need to understand this concept, because if the question give you this kind of range, then for the purpose of this time duration, you need to find the basic salary yourself. So now if you will see on the basis of this example, if I need to find out the basic salary in April, if I'll ask you in April 2025, how much would be my basic salary? Simple, pure mathematics. There, income tax is not doing nothing in this case. This is just a mathematical calculation. So if this is the meaning of this range salary, what should be my monthly salary in April 2025? Vishaka is saying 55, Gayatri is saying 60, Gaurav is saying 60, Gabbar is saying 55, Isha is saying 55, SK 55, Sushmita 55, Vijwal 55, Sridhar 55, Dhanlakshmi 50. Very good, Dhanlakshmi. 50 was in 1st July 2023 and it has been changed on 1st July 24 to 55,000. And it changed from 1st July 25 to 60,000. So on April 25, this date would be in this range. So the basic salary in April would be, of course, 55,000. So from April till June, April, May and June, it will remain 55,000 for 3 months. From July onwards till 31st March 26, that means for next 9 months, it would be 60,000 per month. So the aggregate of these two would be my basic salary. Understood? It's pure mathematics. So if the question gives you a range type question, then you have to find out that according to that range, what would be my basic salary in the previous year for which I need to solve the question. Chalo, one more example. Solve it carefully. Suppose the basic salary has been given on 1st November 2023 is 25,000 dash 3,000. There is no further range has been given. So if there is no further range has been given, that means this 3,000 increment will always applicable. After every 1 year, your salary would be increased 3,000 rupees. Okay. Now for the purpose of my financial year, which is 1st April 2025 till 31st March 2026. Please find out how many months, which salary is applicable on the basis of this range. First of all, to find out this, what would be the salary in April 2025? If it is on November 23, 25,000, then it will increase from 1st November 24. How much it would be? 28,000. Next increment would be from 1st November 2025. So what would be the salary in April 2025? So that would be like this, from April till October 25, then from November till March. 5 months over here and 7 months over here. How much it would be? Seven months, 31,000 by Isha, and 5 months, 34. Gayatri is saying 28, 31. Vishakha, 28, 31. Well done. 28, 31. Correct, very good. So the correct answer would be 28,000 and 31,000. Why? Because after 1 year, on 1st November 24, it would be 28,000. And next change would be from 1st November 25. So April and October time duration will fall between this. From November it will increase, but up to October from 25, because this is from November 24, then December 24, January 25, February, March, and April. So in April 25, the range was running this, because it's changed from November 25. So for April, it would be the old range. So 7 months, 28,000, 5 months, 31,000. So this is how we calculate range month salary, basic salary in our question. Understood? Good. So there are some questions regarding it. Let's discuss those questions. Illustration 23. So we have discussed today's car perquisite. Now let's see if there is a question of car perquisite, how you would be able to solve it. Now this question belongs to car perquisite. A car of 1200 cc which is owned by X Limited. X Limited is employer, okay? And given to Mr. Y, he is employee, to be used both for official and personal purpose. All running and maintenance expense are fully met by employer. He is also provided with a chauffeur. Chauffeur is driver. So now in this case, you need to find out the taxable value of car perquisite. So if you are thinking that after reading this point, you will directly launch on the taxable value, that is a wrong thing. What I have told you in case of car perquisite, first of all, find out who owns the car. Step by step. So in this example, who is owning that car? The car is owned by X Limited. That means employer owns the car. So if I'll going to assume, suppose this is my chart for car perquisite. That was the car owned by employee, and that was a chart owned by employer. So this is the case we are discussing. So all this concept is gone. Now we need to see who is making expenses. The question says all running and maintenance expenses are met by employer. So there was a case employee expense, employer expense. So employee expenses concept has been gone. Forget about it. Now the utilization, it's used for both purpose. So there were three cases: official, private, and both. The official private is out of the game. Now only both case left. So in case of both, so this, which case is this? This is the last case. Car by employer, expenses by employer, used for both purpose. So which case is applicable? The last one. Now can you tell me what should be the taxable value? If the car CC is 1200 and driver also, what should be the taxable value? Look how simple it was. You 1800 rupees per month plus 900 for driver, that would be 2700 per month. The answer is 32,400. Now, even if you have not revised that provision yet, not revised at all, even you did not practice a single question yet, how you are able to solve it? Either you are the smartest people we know, or you just follow the process. So if you follow the process, logically, the car perquisite technically is the most easiest perquisite in the perquisite sections. Because students just try to solve it. They read the question, they want to know the answer. There could be problem, confusion. Find out which case is this. Once you have find out the case, you can visualize the chart yourself. Just think about the chart. If you are able to find out the case, you know what needs to be taxed. Okay, tell me, was car perquisite is difficult? We have just solved it without the revision, without the practice, etc. Here is the solution. 32,400. How much time it takes? Not more than a minute. Got it? Yes, it is complicated, but once you revise it, and if you are going logically with the car perquisite case, I can promise you, this is one of the most easiest perquisite I have gone through. But logic you have to apply. Okay, so now you can accept illustration number 10. Accept illustration number 10. You can try all illustration now. The remaining illustration, except illustration number 10, you can try all the illustrations, and from test your knowledge questions, please try test your knowledge question number 3. Let me write it down. Test your knowledge question 3. Then, and you will see in this third question, that is a fourth illustration, then test question 4. In fourth, that was a range, basic salary range type question is there. In illustration 4, in test knowledge 4 and 5 also. These are range wise salary when salary change. Let me tell you one thing. If in a salary question, you miscalculated basic salary, that would be a disaster. As soon as your calculation of basic salary is wrong, everything is going to be wrong, because your HRA, your gratuity provision, leave encashment, rent-free house, provident fund, all is based upon your basic salary. So basic salary is not correct. Then multiple allowances provision, multiple perquisite, and multiple compensation provision answer would be wrong. So there would not be anything left. So please be very, very, very attentive when you are calculating your basic salary in a salary question. Okay. So test your knowledge question number 3, 4, and 5. You can try yourself as I would going to solve in the next class with all of you. Visual is asking, sir, while solving these questions in exam, writing particular as written in books is mandatory. No, it's not that need to be explained in detail. You have to solve the question. So the provision could be, or the solution could be understood by the examiner, a copy checker. So there would be working note, but in short, in the study material, the explanation is in detail completely because they need to make you understand each and every point. So for the purpose of practical solution, you can solve it in shorter way, like if there is a car perquisite, as we have seen that. So you do not need to show in the working note that car owned by employer, case owned by employee, expenses paid by, this is the last case. No, you can directly tax as car is used for both purpose. The taxable value would be 1800 plus 900 for driver. So that would be sufficient. If there is a rent-free house, then you need not to write it down that if they ask that rent-free house in Delhi, you need not to write it down that population is exceeding 40 lakh. No, you can write it down that if the house is owned by the owner, we need to take 10% of the salary as taxable value. Suppose there is a case of, as we have seen, transfer of car. In that case, 20% for each completed year. So you can directly solve it. You need not to write in detail that for the purpose of car perquisite. In the study material question, they have explained you each and everything. So every student can understand with the help of reading that provision. But for the purpose of examination, only solution is enough with short working notes. That's enough. SK is saying that please re-explain. SK, we are on YouTube. You can scroll back the video and you can go through again at the laptop concessional rate. Because if we are going to repeat the same provision again and again, that won't be possible. Okay. Santosh is asking, if I earn 12 lakh rupees during the year and I spend 5 lakh during the year on my personal purpose, tax would be calculated on 12 lakh or 7 lakh. Santosh, this is not the correct question. You did not tell me that what you have earned from salary, etc. And again, as you have written that 5 lakh during the relevant year on personal purpose. So personal purpose expenditure cannot be claimed whether it's a business or any other income. So this question is not complete, but let me tell you, personal expenditure we cannot claim anywhere. So if the question is this, the answer would be 12 lakh rupees. Any more query, students? If yes, please ask, as we are going on a story mode. So Santosh, if you are getting salary of 12 lakh rupees, you cannot deduct anything which is on personal expenditure. You have seen the format of salary. In this salary format, only you can claim standard deduction benefit for the purpose of deduction, or entertainment allowance deduction, or professional tax deduction. That's it. You cannot take any other benefit of your personal expenditure, etc. Aditya asking, sir, if I work for 2 places, how should I calculate basic salary? You have to calculate the basic salary for both cases separately. So what would be the difficulty in that? For employment 1, the separate basic salary would be there. For employment 2, the separate basic salary would be there. And for the respective employers, you have to calculate the perquisite separately, considering the respective salary from that organization. Let me tell you, salary is a gigantic topic. If that was a question from a single employer, you need a lot of time to solve. So examiner will not play with you that they have provided the information of 2 employers. I don't know in that situation how much time it will take to solve a question. So This question is your correct, but practically I do not believe that that kind of multiple employer question could be asked in the examination. DA is 1 lakh and 20% part of retirement benefit, I guess you are asking. Basic salary would be added. Yes, in this case, whatever is basic salary, 20% of basic salary would be DA. So that would be 1,20,000. Gayatri Sethi is asking about illustration number 13. That would be, I believe, medical perquisite. Let me see, what was that? He's saying illustration number 13, why was the 25,000 used for treatment of Mrs. G? Was exempt, not in, because it is in government hospital now. Gayatri, we have discussed in medical perquisite that if the hospital is maintained by employer or if the hospital is owned by government and payment made by employer, in that situation, you cannot tax it. That is going to be an exempted perquisite. Tanisha is saying, thank you so much, sir, for making salary head easy to understand and increase our confidence. I understood all the concept and able to solve the session. Thank you, Tanisha, for your appreciation. And let me tell you, everything is easy. It's just the way how we are delivering to it. And once you have created interest in any chapter, that would be possible only when you are understanding the provision. Things will be definitely easy. Sridhar, sir, if I am 150 per month, but I receive only 125 per month, remaining salary I receive at a time retirement, then my actual is now 150 per month or 125. Sridhar, we have discussed this provision at the starting of salary. It says salary due or received, whichever is higher. So it's due 1,50,000. Whether you receive 125 or you do not receive anything, still 1,50,000 would be your basic salary for the purpose of taxability. So receiving does not make a difference. If salary has been due, that is going to be taxed. तो फटाफट से स्टोरी सुनाते हैं, फिर आप लोग अपनी क्वेरी भेजते रहो. इफ देयर वुड बी एनी मोर क्वेरी, आई विल गोइंग टू एक्सप्लेन. सो स्टोरी ऐसी है कि एक किसान था और वो एक गांव में रहता था अपने घर के बाहर. उसके घर के बाहर एक काफी बड़ा एग्रीकल्चरल लैंड था जहां पर वो फार्मिंग करता था. बट उस जो एग्रीकल्चरल लैंड था उसका जो एक कॉर्नर पार्ट था, वहां पर एक बहुत बड़ी रॉक थी, एक बहुत बड़ा पहाड़ जैसा कंस्ट्रक्शन था. एंड स्टार्टिंग में उसे वहां पर फार्मिंग नहीं करनी थी, तो बाकी बचे हुए हिस्से में फार्मिंग करके उसका काम चल जाता था. बट धीरे 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 जैसे उसको अपना बिजनेस ग्रो करना था, तो वो वाला पार्ट यूटिलाइज नहीं हो पा रहा था जहां पर एक बहुत ह्यूज रॉक थी. तो जब एक टाइम आया जब उसे लगा कि अब मुझे इस रॉक को हटाना ही पड़ेगा, तो उसने फिर सोचा कि कल हटाऊंगा, अपने सारे रिलेटिव्स को, पास वाले गांव के लोगों को बुलाता हूं और उनकी हेल्प से फिर इसे हटाऊंगा. तो उसने अपने दोस्तों को बोला. कई दिन तक कोई नहीं आया. 1 महीना निकल गया, 2 महीना निकल गया, किसी ने कहा हम बाद में आएंगे. ऐसे करते करते कई साल निकल गए, बट वो रॉक वहीं पर रही. एक टाइम आया जब उसे लगा कि अब इसके बिना मेरा बिजनेस बेकार हो जाए. तो उसने सबको बुलाया, सबको अरेंज करा, पैसे देकर उसने लेबर्स बुलाए, मशीन्स मंगाई कि बहुत बड़ी रॉक है, इसके लिए हमें बड़ी मशीन चाहिए होंगी एटसेट्रा. सब लोग आ गए और उस रॉक को हटाने के बारे में डिस्कशन चल रहा था. तभी जो एक वहां पर लेबर था, उसने एक रॉक को चेक करने के लिए बड़ा सा हैमर लिया और उस रॉक के पास गया और उसने उस हैमर से उस रॉक को मारा. तो वो जो रॉक थी देखने में जो बहुत ह्यूज थी, और एक्चुअल में थी देखने में ह्यूज, अंदर से हॉलो थी. हॉलो मतलब अंदर से खाली. बस स्ट्रक्चर ऊपर से देखने में ह्यूज था, अंदर से खाली थी. जैसे ही उसने हैमर मारा, वो पूरी रॉक टूट गई, एक ही हैमर. एंड वो जितनी प्रिपरेशन की थी, मशीन्स को मंगाया था, लोगों को बुलाया था, वो सब वेस्ट हो गए. एंड उस फार्मर को तब ये रियलाइज हुआ कि अगर शायद ये मैंने ट्राई कर लिया, ये उतना डिफिकल्ट काम था नहीं जितना मुझे लग रहा था. बिकॉज सब लोग ये कहते थे ये रॉक बहुत मुश्किल है हटाना, इसके लिए बहुत इक्विपमेंट्स आएंगे, उसके रिलेटिव्स, पड़ोसी सब कहते थे बहुत लोग बुलाने पड़ेंगे तब ये रॉक रिमूव हो पाएगी. इस चक्कर में उसने कभी ट्राई नहीं किया. शायद उसने वो खुद से ट्राई किया होता तो मे बी वो उतना डिफिकल्ट काम था नहीं जितना लोगों के कहने से उसे लगा. इन द सेम वे, आपको जब कोई कहता है कि सी ए जस्ट लाइक अ रॉक, इसको आप नहीं कर पाओगे, तो वो हम अपना एक मेंटल ब्लॉकेज बना लेते हैं कि हमसे सीए नहीं हो पाएगा क्योंकि किसी और से नहीं हुआ था। सो नोबडी विल डिसाइड आपकी लाइफ में कि आप क्या करने के काबिल हैं या नहीं। द ओनली वन पर्सन कैन डिसाइड, दैट्स योर सेल्फ। तो कई बार लाइफ में ऐसी प्रॉब्लम आती है कि हम सोचते हैं इसे बाद में करेंगे, एक महीने बाद करेंगे, दोस्तों के साथ बैठ के करेंगे, डिस्कशन करके करेंगे। मे बी आपने उसे शायद ट्राई नहीं करा है सही तरीके से, तो वो प्रॉब्लम उतनी बड़ी लग रही। मे बी कोई सब्जेक्ट है जो आपको लगता है बहुत डिफिकल्ट है, इसे फ्री होके पढ़ूंगा एक महीने बाद या 15 दिन बाद, या इसके लिए मुझे 6 घंटे चाहिए एक साथ। नो, जस्ट ट्राई इट। मे बी वो उतनी बड़ी इश्यू है ही नहीं लाइफ में। इवन साइंटिस्ट सेज कि जो भी अपनी लाइफ में हम प्रोबेबिलिटी सोचते हैं ना कि ये ऐसे हो जाएगा वैसा हो जाएगा, तो जितनी भी हम प्रोबेबिलिटी नेगेटिव सोचते हैं उसमें 80% तो कभी होता ही नहीं। वो हमारी सिर्फ इमेजिनेशन होती है। तो 80% तो हम चीजों को नेगेटिव वैसे ही सोच लेते हैं, होता 15-20% है हमारे साथ रॉन्ग। बट बिकॉज वी डोंट ट्राई, तो वो जो 80% चीजें ठीक हो सकती हैं हम वो भी नहीं करते। Aditya is saying how to avoid negative people, ignore them. Just like the theory of Pluto. There's a theory of Pluto, so you can understand how to ignore negative people. So in the next class, I will tell you the theory of Pluto. You will able to understand how to ignore people, but before that, you have to be confident for yourself. So कोई भी सब्जेक्ट है, कोई भी टॉपिक है, कोई भी सिलेबस है, आपको डिफिकल्ट लग रहा है, तो पहले ट्राई करके देखो। मे बी वो उतना डिफिकल्ट हो ही नहीं, है उसके बाद लगता है, देन वी विल सी द सॉल्यूशन। उसके भी सॉल्यूशन पैटर्न है, बट बिफोर ट्राइंग एनीथिंग ये मान लेना कि मुझसे नहीं होगा, दैट्स द रॉन्ग। एक्चुअली दिस इज द वेरी रॉन्ग थिंग टू अंडरस्टैंड। सो दैट वाज द स्टोरी फॉर ऑल ऑफ यू। महक को भी पसंद आ गई स्टोरी यार, सर आपकी स्टोरी सच में बहुत हेल्पफुल है, बहुत मोटिवेशनल है। इनकम टैक्स की क्लास है, ठीक है ना, मोटिवेशनल नहीं है, बट ऑफ कोर्स दैट्स अ पार्ट। एंड इफ यू आर गेटिंग मोटिवेटेड विद दीज स्टोरीज, it's very good for all of us. So I believe Aditya is saying, sir, if descriptive first question is mandatory in exam, first question can I write last? Yes, you can write it last, not a problem. The sequence of question you can decide. And regarding this question selection pattern, how to attempt question paper and examination, there would be a revisionary class also. That would be, I guess, after 1 month, I believe. So that would be informed to you. In that revision class, we will discuss these kind of concepts: how to handle the pressure, what are the important points, how to attempt the question, etc., etc. Santosh, for January 27, when will classes start? These classes are also for January 2027. You can watch these classes, Santosh. These are also applicable for January 2027. And if there would be a new classes for a special 2027 January, you should mail to BUS. They will definitely going to tell you about this. So I believe there is no more query. So Ashok sir, can we close the session? Yes, sir. Over, sir. Thank you, sir.